For 30 days, I didn't just log my trades, I logged every single emotion, doubt, and impulse that came with them. And what I found were a few specific psychological triggers that were secretly sabotaging my profits, and I'm going to show you exactly what they are and the simple framework I built to take away their power. Before I did this, I was stuck in a loop that I'm sure a lot of you know all too well. I had a solid strategy. I knew my setups. I could look at a chart and tell you with pretty good confidence where the price was likely to go. But my account balance just didn't reflect that knowledge. I was so inconsistent. I'd have an amazing week, and then follow it up with a week that would wipe out all my gains. Honestly, it was driving me crazy, because I knew the problem wasn't my strategy, it was me. It was the choices I was making in the heat of the moment. It was the gap between the trader I was on paper and the trader I was when my actual money was on the line. I was dealing with all the classics: fear, greed, and a total lack of discipline. So, I made a deal with myself. For 30 days, I'd stop obsessing over the profits and start focusing on my own mind. I made what I call a psychological log, a trading journal that went way deeper than just entry, exit, and P&L. It basically became a mirror, showing me the behavioral patterns I was completely blind to in real time. And what it showed me? Well, it changed everything. Here's what I did, and it was pretty simple, but I had to be strict about it. For every single trade I even thought about taking, I wrote everything down. This journal wasn't just for trades I executed, it was for the ones I considered and passed on too. This is what I tracked. First, the pre-trade emotion. Before I even touched the mouse, I wrote down how I was feeling. Confident? Anxious? Rushed? A little too cocky after a few wins? This was all about capturing my mental state before a single dollar was at risk. Second, the in-trade impulse. While the trade was live, I'd jot down my thoughts. If the price moved against me, did I feel that itch to drag my stop-loss further away? If it shot in my favor, did I get that impulse to just close the trade and grab the tiny win? And third, the post-trade reflection. Right after closing a trade, I'd write down how I felt. Relief? Regret? Mad at myself for breaking a rule? This was key because it caught the raw emotional aftermath before my brain could start making up excuses for my mistakes. For 30 days, I was brutally honest. I wrote down every irrational thought, every moment of panic, and every greedy impulse. At first, it was just a mess of notes. But by the end of week 2, clear patterns started jumping off the page. The data was undeniable. My biggest losses weren't just bad luck. They were the direct result of a few specific, repeating psychological triggers. The first and most painful trigger was the fear of missing out, or FOMO. We all know what it is, but my journal showed me just how deep its claws were in my decision-making. On day 5, for instance, I saw a currency pair just rocketing up. It wasn't one of my setups. There was no clear signal. My trading plan was screaming, stay away. But my brain was screaming, dude, everyone is making money on this, you're gonna miss the whole move. My journal entry from that moment literally says, feeling anxious, rushed. No, I shouldn't jump in here, it's way too high. But the move is so strong. Impulse is to just mark it by now. And I did. I bought at the absolute top. Almost instantly, the market turned around. My stop-loss got hit in minutes. It was a textbook FOMO trade. Looking back at my journal, I saw this exact pattern again and again. A huge chunk of my losses came from chasing moves that had already left the station, all because I was scared of being left behind. The journal forced me to admit that FOMO wasn't a rare mistake for me. It was a consistent, account-draining habit. The second trigger was even more destructive. Revenge trading. This is the little demon that pops up on your shoulder right after you take a loss. On day 12, I had a trade I was super confident in. The setup was perfect. I followed my plan to the letter. And still, the market did its thing, and I took a full 1% loss. I was pissed. My journal entry captured it perfectly: angry. The setup was clean. Market just didn't care. Feel like I need to make it back, and fast. That feeling, the need to make it back, is the poison that starts the revenge trading spiral. Instead of just shutting it down for a bit, I immediately went hunting for another trade. I found some mediocre setup I'd normally ignore, but my mind, still angry about the last loss, justified it. This one will work, I told myself. I even upped my position size, hoping to win back what I lost. That trade also lost. Now I was down 2.5% for the day. The anger turned into desperation. I took another reckless trade, and then one more. By the end of the morning, I had blown right through my weekly loss limit. My journal showed this wasn't just a one-off bad day. It proved that after any decent-sized loss, my risk management discipline would just collapse. I ditched my plan in an emotional fit to undo the damage, but all I ever did was make it 1,000,000 times worse. The journal was the cold, hard evidence. One small, acceptable loss would often trigger a disaster. The third trigger was the sneakiest and, for me, the hardest to admit. My ego. It's that voice in your head that doesn't just want to make money, it wants to be right. I found so many examples in my journal of holding on to losing trades way past my stop loss. The entry would say something like, "Price is past my stop." But my analysis was solid. It should turn around. I'll just give it a little more breathing room. My ego just couldn't handle being wrong. Taking that small, planned loss felt like a personal failure. So instead, I'd risk a massive loss, all to avoid admitting my prediction was off. My journal showed how ridiculous this was. I was consistently turning small, manageable losses into account-crippling ones, just because my pride got in the way. Ego also popped up after winning streaks. After a few good trades, a feeling of "I'm the king of the world" would set in. My notes from day 21 say, "Feeling unstoppable. I've got this market figured out. Bumping up the size on this next one." That overconfidence led me to take on way too much risk, ignoring my own rules because I felt invincible. Of course, the market loves to humble you, and those ego-driven trades were often the ones that sent me crashing back to reality. The journal made it impossible to ignore. My ego was quietly poisoning my success. Around day 25, I sat down and reviewed all my notes. I color-coded my trades: green for wins, red for losses. But then I added another layer. I highlighted every single trade that was driven by FOMO, revenge, or ego, and when I saw it all laid out, wow! It was a slap in the face. Nearly 90% of my losing trades were directly tied to one of those three psychological triggers. My problem wasn't bad luck. It wasn't the market. It was a complete failure of emotional discipline. The journal proved it. Success in trading isn't just about having a good strategy, it's overwhelmingly about mastering your own mind. That's when I stopped being a victim of these feelings and started building a system to manage them. The goal isn't to get rid of emotions, that's impossible. It's to see them coming and have a concrete plan to act rationally anyway. Here's the simple, 3-step framework I came up with. First, the pre-trade emotional checklist. Before I can even think about putting on a trade, I have to answer 3 questions, and I have to physically write them down. Am I feeling rushed or chasing the price? This targets FOMO. Am I angry or trying to win back a loss? This targets revenge trading. Do I feel like I need to be right on this trade? This targets ego. If the answer to any of these is yes, I'm not allowed to trade. I have to close the charts and walk away for at least 15 minutes. Second, the hard stop rule. I put in a non-negotiable rule: 2 consecutive losses, and I am done trading for the day. Period. This one rule completely short-circuits the revenge trading spiral. It forces me to accept that losses are just part of the game and stops one bad day from wrecking my entire week. It's a circuit breaker for my emotions. Lastly, the weekly psychological review. Every Sunday I review my journal, but I don't focus on the money. I focus on my psychological score. I ask myself. How many times did I feel FOMO and successfully step away? Did I stick to my hard stop rule? Did I let my ego call any of the shots? This review process is now about reinforcing my identity as a disciplined trader, not a gambler. It shifts my focus from short-term wins to long-term consistency. So what changed after 30 days? Honestly, almost everything. My P&L curve finally started to smooth out. Those wild emotional swings were replaced by a sense of calm and control. I still feel fear, I still feel greed, and my ego still shows up to the party. But now, they no longer get to be in the driver's seat. I can see them coming, and thanks to my journal and this framework, I have a plan. This whole experiment taught me that the most important chart you can analyze isn't on your screen, it's the one inside your own head. The patterns that truly decide if you'll win or lose are your own behavioral patterns. So, here's my challenge to you. For the next 30 days, start your own psychological log. Write down your emotions before, during, and after every trade. Be brutally honest with yourself. Find the triggers that are holding you back. I promise you, what you discover will be the most valuable trading lesson you will ever learn. If this journey resonated with you and you want to see more content on building a bulletproof trading mindset, make sure to subscribe. And let me know in the comments, what's the one psychological demon you struggle with the most? Let's talk about it.